Hey, welcome everyone. Tom here from Park Avenue Trading, your chief dealer, keeping you sane in these insane markets. And welcome to webinar number 5 on how to become a proficient day trader. And we're going to continue in this webinar basically on market structure. And we're going to go one step further in here. We're going to zero in on the hourly charts to basically find something that our team came up with at Casa Sperimentorino, which was known as top lock, bottom lock. And I'll get into that more later on in the video, but I want to finish up with market structure with an ABCD or an ABCD continuation or an ABC continuation pattern. So remember in the last video, we said that in order for a marketplace basically to show that it was moving downward, we needed a lower low to break in order for it to go lower. So there are times in the marketplace where the lower low gets broken, and then the market reverses back up and takes out the previous high. That is an ABCD correction. There's also an ABC continuation pattern. So in other words, you got a high, you got a low, you got a lower high, then it comes down to that previous low and it doesn't break it, but then it breaks through the top. That's a continuation pattern. So let me see if I could find some of these and we can point them out so you can see exactly what I'm saying. They say a picture's worth 1,000 words. With me, it's worth 10,000 words. So hang on one second. All right, so I want to bring this up because sometimes markets really are they're an enigma, right? So if we're looking at this market, and I have to be candid, I'm just always be candid with you guys. We got a high, we got a low, we got a lower high. Which one is the lower low? I mean, is it this one or is it this one? Now, because we have the benefit of hindsight, we could say, yeah, this one right here is the lower low. But this was, a low. And we had a minor reaction up here, and then it broke. So at times, sometimes it can be, excuse me, a little bit difficult to actually pinpoint. But we could say that this is, we can go right here as the lower low. So hang on a second here. Let me shut this off so I can get my numbers again. So let's say we're looking at this marketplace. We got a high, we got a low, we got a lower high. We have the lower low that needs to break in order for us to say the market's turning down. Okay. Now, in the daily analysis, I probably would have a bid point here. In other words, a support point. I don't know for sure because I don't know what day this was actually, and we're just playing around with the markets. It's Sunday, and the markets are dead right now, so I can't say for sure. But this point right here, this level right here, is basically an ABC then correction or a correctional pattern. So why? Because if we look at this top right here, okay, the market came down, came back up, came back down, couldn't break this level, but once it breaks this top, it's basically saying upward at that time. Okay, so I don't know how much further it goes up, but it moved from, this is a 1 hour chart, so it moved from, let's see here, let's shut that off. It moved from 157 to 157.51, 50 pips up. I don't know how much of it, if it went any higher. It didn't. It wasn't really that big of a move, but that's just an example of a correctional move. All right. Now let's see if we can find the ABCD, where in other words, it breaks the low and takes out the previous high, and then that's the AB equals CD correction. Those are a little bit, they're here. That it happens often. It's just finding them when like you need to find them. Hang on one second. Okay, so here's one, or a decent example of one, I guess. Let's just going from, I mean, we could go high, low, lower high, deeper low right there. I mean, it's not much. I'm just trying to show the pattern. It's really basically, I'd have to say it's a triple bottom at this point. But just to give the example, okay, so we got the high, we got the low, we got the lower high, and we got the deeper low right there. Okay, well, where's the top? The top is this one right here. And here's the A, B, C, or D correction. Once it breaks this level, marketplace is showing strength going up. Now, how much further did it go up? I don't know. Like I'm just basically said, I'm trying to point out the ABCD correction. Yeah, it moved up really nicely from there. Okay, so now that we got the ABC continuation pattern, and then we have the ABCD correction pattern, let's move on to the star of the show that is called top lock, bottom lock. Now, the name is a misnomer, okay? It's not, you know, we came up with top lock, bottom lock because it was basically at that time, we could say that the marketplace top was locked. So we were looking for a specific place to determine where the resistance was for that chart on whatever chart, whatever time frame that we were trading. And also the bottom, if the bottom, we considered the bottom lock, we were looking on that chart to basically determine at what price the bottom should hold in order to show that the market was continuing. So this is a type of technique that you can use on any time frame. Now, remember, the lower time frames, there's going to be a lot of these, and there's going to be a lot of whipsaws because that's just the way it is. But if you're trading 10-minute charts, you understand that. I mean, that's your life, right? So we're going to be using like 4-hour charts for this just to get a better feel for it. But it works on 1 hours. It's not as good on 1 hours, but you could use it. You could use it on any time frame that you want. And I think that what's really important to note is that any type of trading system should be used. It should be universal. It should be able to be used in corn, wheat, hogs, S&P 500, gold, Forex, cryptocurrencies, anything. That for me is a good trading system. If it's resilient enough, if it's robust enough to solve, to work in all different types of markets, then you have a viable edge, or an indicator that's a viable edge. So let's get on to top lock, bottom lock, and that's going to be the star of the show. Okay, so what I did here, actually I found old analysis, which was really cool on my chart from March 31st to April 7th. So I marked off, I was looking at weekly data at this point. So it's cool, it's here. So this is a 4-hour chart. All right. Now, remember, we said you could do this on 1 hour as well. There's also 2 flavors to this basically indicator. All right. I'm going to give you both of them, and you could choose whichever one that you want. Paul, one of our mathematicians, statistician guy, basically said that there was no real major advantage to either one. It was all dealer's choice, dealer's preference. So how does top lock, bottom lock work? Well, if I'm looking at this market right here, if I go back to the previous week, okay, I'm basically looking for the first close that is greater than the close 4 bars before, or it can be the first close that's greater than all 4 previous bars. First close greater than the close 4 bars before, or the first close greater than all 3 previous bars. So it's including that bar. Like I said, a picture's worth 10,000 words with me. All right, so let's just look at last week. Okay, so last week, if I looked at this 4-hour chart, right? I had this close 1, 2, 3, 4. It's basically equal. This will close right here. 1, 2, 3, 4 was greater than the close 4 bars before. So this week was saying that at this point, there was support at this level, okay? The following week opens, and it trades down through 162.94, and it comes down to a low of 162.61. So it traveled 30 pips away from what was considered a bottom lock from last week. So the point was there, it broke. All right, so however, it's giving you an indication of what you should be looking at this week. Since you traded down to that, the low was basically made first in this week. All right, we could talk about, there's a market rhythm. If what you should be looking at whether or not is the low made first, is the high made first, is it a buy day, is it a sell day? We'll get into that. That's kind of esoteric, but it's really important. If you write, if you start looking at markets in respect, like what happened first, high was made first and then it came off. Well, that's basically what's known as a sell day. All right. If your low is made first and then the market goes up, that's what's known as a buy day. Now we're looking at weeklies here with a 4-hour chart. So it would be, you could say, well, that was the buy point for the week. And, look, I'm not talking out of both sides of my mouth. I'm trying to be real. All right. So the point that we had was broken by 30 points. That's the way it is. And then the marketplace started trading up. Okay. So this close is greater than 1, 2, 3, 4. This is the new bottom lock. Okay. So if I go Alt H, well, why won't it let me do it? All right, so Alt H right there. That is the new bottom lock right now on the 4-hour chart. Okay, so that's basically saying that really, if this marketplace doesn't go below this, it should be going higher. Well, where? Well, you could look basically back here. You could look up into here, which is probably better. This is 2 weeks prior. This was a high 2 weeks prior, so put that up, Alt H. And we have this right here, Alt H. So the marketplace basically could have traded up to here, and then, it should have found resistance. And, it went up a little bit higher. So now what about a top lock? Top lock's the exact opposite. Top lock is the first close less than the close 4 bars before it, or the first close less than all 4 bars. So when I'm counting this bar, I'm going back 1, 2, 3, 4. Okay, so it's bar plus 4, I guess. That's the way it goes. So this close right here is less than 1, 2, 3, 4. It's also less than all 4 previous bars before it. So this marketplace is basically saying at this point and this week on this 4-hour chart, this top is locked. Let's see if I can move this. Why can't I move it? There we go. That top is locked. That should be resistance. So if the marketplace, basically what we have now done is put a fence around this week as we're trading. Okay, now this was a very nice week. It was a very nice uptrend from this point. Wonderful. Okay, marketplace retraced back down. But let's look at the following week. Okay, we had a top lock here. The market basically came up to it. It closed above it, but the queen said no. So the top lock from last week is giving us an indication like, oh, there's resistance up here. Okay, boom. Look how it used that point from the top lock of last week to use it as resistance. And what does it do? It comes right back down to the bottom lock. It exceeds the bottom lock. And then guess what? Finally, we get a movement. Now it's going to be this bar 1, 2, 3, 4. That's basically saying this bottom is locked from here. So that's top lock, bottom lock. I hope that makes sense. All right, so in the next video, maybe we'll touch again a little bit more on this, top lock, bottom lock. And I got to figure out where we're going next, really, because we went over the weekly analysis, daily analysis, blah, blah, blah. We'll figure it out. I'll figure it out, what we have to talk about next, because so much stuff comes into my head. And then eventually we're gonna get into the Fibonacci strike trade, okay? Which is what I promised you in the beginning of the series. So listen, if you like what you see, if you right there like what you see, please like and subscribe. Head on over to Park Avenue Trading and get yourself a 3 steps book, basically giving you ideas about whether or not a price is going to break. Like, for instance, like right here, when this marketplace broke this, okay, well, we had an up close. I mean, and it gives you all the rules, basically, of like whether or not that would be a good break or not, okay? So you could go Park Avenue Trading and get yourself that book. Look on page 11, it's there. So I look forward to seeing you again. And remember, always enjoy the party, but dance near the door. Cheers.